I'll move into some myths. So these are super common myths. Tax depreciation, it's almost seen as a dark art. A lot of property investors don't know about tax depreciation. They rely on their accountant for that advice, or they just simply think that their accountant's going to look after it and do it for them. Unfortunately, that's not the case. And we work with accountants every day of the week. They're a major referrer for our business, and what we do positively enhances what your accountant does for you. So if you're a property investor and you've got a really astute accountant that's used to dealing with clients with an investment property portfolio, it's a no-brainer. They will tell you to get a tax depreciation schedule done by a registered tax agent and quantity surveyor like us, and they'll be able to plug those figures into your tax return to increase your tax return or reduce your tax payable. So I suppose that the other side to that argument is, why aren't they telling me to get a tax depreciation report done? I struggle with this every day in the week, and both of my parents are accountants and they can't tell me either. So that some interesting discussions over Christmas dinner. But I think, like anyone, there's a lot of accountants out there that are working towards a fee, that they've got internal fee structures, KPIs. What we do produces a greater benefit for their client, but it also increases the work that they've got to do. They've got to pull the figures out of our report, put it into your tax return so that you get the benefit. So there might be a bit of that, but there's also a big case for the Income Tax Assessment Act is literally a book this thick. And we are experts in about 10 pages of it, which is your Division 40 and Division 43 allowances. So they're broadly across all of it and do a fantastic job, but it's relying on us to be expert in that 10 pages so that you're claiming the maximum benefit.